So, see, Rudramurthy, similar question to you on the markets, but also talk to us about Reliance Industries. That stock is down almost 3%, quite a bit of drag on the markets. Do you see any recovery in sight for Reliance, any level which should be a very strong floor?
See, for me specifically, 2,800, 830 holds a very strong support to Reliance and use this as an opportunity to buy. Yes, there are rumors on street that yes, taxation changes can happen and all capital gains which are now taxed at 10% for LTCG and short-term capital gains at 15% can become normal rate. And this has been one of the reason why markets are taking this rumor and falling. But I feel all this will happen generally before the budget, and generally these stocks will come and go, and use this as a great opportunity to buy into good stocks. So for me, Nifty is also underperforming compared to Bank Nifty again because of Reliance. And this is an opportunity definitely to buy into good stocks. For example, look at PSU banks. For me, SBI at current levels of around 815, 820 is a great buy. Look at Canara Bank as a good buying opportunity at current level. And you have a lot of good stocks to buy. Use this dip as a good buying opportunity. I am bullish on market and this dip has to be used as buying opportunity.
Use the dip as a buying opportunity. Let's take that conversation forward. Shibani Sircar as well joins in on the show right now. Shibani, hi, afternoon. Par for the course, I guess, Shibani. I mean, I don't know what could be the particular reason that what could attribute this kind of a fall in the market to, and a sudden one at that. We seem to be the only standalone case amongst all of our global peers. But that said, you think some more correction and could be a great, buying opportunity?
Yeah, so our markets have performed extremely well in the overall context of the emerging markets. And clearly, from that perspective, India has been a standout. My view is that the ingredients that you've seen, which have driven markets so far, are still fairly intact. We are in the midst of our earnings season. And so far, what we have seen in terms of corporate earnings delivery has been pretty much in line with expectations, with most of the sectors and stocks that have reported numbers so far, by and large, have been in line with estimates. So after a long period of time, we've seen that over the last few quarters, earnings upgrades and downgrades have been pretty much in a very, very narrow band. So earnings have been steady. Flows continue to be strong, especially on the domestic side, and that is also helping. Of course, when markets outperform in a big way, especially in the context of emerging markets and China, we do expect some degree of volatility. What we continue to believe is that if you look at valuations for the market, specifically the Nifty, while if you look at long-term historic average multiples, current multiples are slightly above history, but it also coincides with earnings growth, which continues to remain strong. So our belief is that large caps, specifically if you look at the Nifty in terms of valuations on a one-year forward earnings basis, valuations are slightly above history, but earnings are supportive and therefore it is not extremely stretched. Within the mid and small cap baskets, one has to be stock specific and look at segments where valuations and earnings are in your favor. If you look at history, clearly mid and small caps continue to trade at multiples which are significantly higher than what average valuations are. So our belief is that from an overall market perspective, earnings, flows, and macro parameters continue to remain fairly in check. And therefore, if you look at some degree of volatility given the past performance, it's something that is part and parcel of markets.
That's a take coming in on the markets. Yes, earnings have been supportive, but don't you think, Shibani, that most of it is priced in? Because I mean, even if you look at this earnings season, there's hardly been a surprise coming in, barring a couple of names perhaps. If at all, which sectors do you think which might surprise on the upside or are poised for an upgrade from here on?
So absolutely. So if you look at what's happened so far in FY24, earnings estimates at the beginning of the year and where we have ended up, the deviation has been hardly a few percentage points. So you're right that earnings delivery has been pretty much in line with estimates. However, when you look at our earnings as well as our return ratio profile in the context of emerging markets, we clearly continue to stand out. And therefore, from a relative basis, we believe that ROE profile of Indian markets as well as earnings profile continues to remain fairly healthy. In terms of sectors and delivery, what we have seen so far, where there have been earnings ahead of estimates, a few sectors do come to mind. One, cement earnings delivery from the companies that have reported numbers so far have been slightly ahead of estimates. Autos, which have delivered numbers, and even on the auto ag space, the numbers have been fairly healthy and maybe slightly ahead of estimates. Now, if you look at the earnings season so far, of course, the bulk of earnings so far has just still come in from the BFSI space and technology. Technology, as expected, was a muted quarter. But even in the BFSI space, I think one standout for me has been that, contrary to fears of continued sharp decline in net interest margin for banks, margins have held up fairly steady. Banks are now seeing better deposit trajectory, which means that the liability franchise is also improving, and that bodes well from a balance sheet perspective. So while overall, yes, earnings have been in line with estimates, but I think continued delivery of mid to high teens earnings growth for the next 2 years bodes well for the market.
It's Reliance, L&T, Bharti. They're the ones which are weighing heavy on the indexes. I don't know if you can bring up that contribution plate or not, but clearly Reliance, L&T falling over 3%, bound to be they are the biggest laggards. Maruti as well has fallen another 2.5%. The Adani names as well falling. Kotak Bank has ebbed off a little bit more. It's down nearly 1.6% or so. Asian Paints, IndusInd Bank. These are stocks which are weighing heavy on the indexes as we speak. What is Bajaj Finance up to, considering, that started off with a gap up, and unfortunate as it may be, on a day when you started off with, such high single-digit gains in Bajaj Finance, it's completely petered down from the start to the finish, and a very gradual decline at that, much unlike what the markets have done. It's now up 1.6% up in the green. But Kunal, what about Bajaj Finance next? What do you see on the charts? Unfortunate that it didn't hold on to the morning gains.
Yeah, I think that's the right objective for the stock. So, it was coming closer to a breakout in the initial, first 15 minutes, half an hour or so, when the stock was coming closer to that 7,400, 7,500 mark. This is actually now a triple resistance for Bajaj Finance. So, in the last 1 month, the stock had tried to scale past about the 7,500 mark, failed to do it. In the previous attempt, the stock made a low of 6,700 approximately. So, which means on the way down, if the stock doesn't break below the 6,700 mark, then we could probably expect that gradually the stock would make an attempt again towards 7,500 mark and break above those levels. But if we break below that 6,700 mark, I would believe that we could probably be expecting a much more sharper correction into the stock price. So as of now, no trades on the stock, but I think we'll wait out for a point where the stock either makes an attempt towards the breakout of the resistance or the support.
Okay.
Shibani, do you believe that, we're yet to hear from a Britannia, Unilever, etc., but just going prima facie by Dabur's reading, the green shoots pretty much are there, and maybe this is the pocket to bet in on?
So I think for the entire consumer FMCG segment, what we have seen in terms of that K-shaped recovery, where premium continues to be ahead of mass, still is what is playing through. However, at the margin, when you look at data maybe does suggest that there are some initial green shoots of recovery coming through. However, it is not likely to be a very sharp recovery. It's going to be more likely a very slow and steady recovery. A few data points that we have been tracking here, apart from the commentary that's coming through from some of the companies that are reporting numbers. One is that the expectation is that this year will be a normal monsoon year. And that means that going into the second half of the year, if the Kharif output is good, we will possibly see some recovery take place where rural income is concerned. If you look at the data in terms of real rural wages over the last 4-5 years, the number has been largely flat. And therefore, that is clearly what has impacted mass consumption, whether it be in various categories and segments that you're talking about. The second factor is that we are tracking is the demand for Manrega jobs, and that demand seems to have come off somewhat. The third factor is that infrastructure related activity would likely pick up post the elections, which means again job creation, where the entire segment is concerned on the infrastructure, should also help support wages, especially at the lower end segments and rural wages. So all these data sets seem to point that maybe we are at the bottom. Whether we have recovered or whether there is a sharp recovery that is underway, the answer is still no. But we would expect that going into the second half of the year, you should start seeing some green shoots of recovery where mass consumption and FMCG goes.
Point taken, but since we are talking about FMCG, let me bring on board Vinny. She'll join us to talk to us about the earnings expectation from Titan and Britannia. Titan, of course, will come within the course of next 1 hour, I believe, while Britannia will be a little later. Vinny, why don't you first begin with Titan and then we can discuss Britannia too?
So yes, in terms of the jewelry retailer Titan, we are expecting around 11% growth in terms of revenues, profits 8.2% growth, while margins expected to see a slight bit of an expansion of 11.4%. But what's key and what we'll watch out for is also in terms of gold prices. How is that shaping up? Any impact in terms of demand there? Because we saw a sharp rise in terms of the gold prices. So yes, expecting a high double-digit growth in terms of value mainly, and this is despite the gold prices so far. So that's interesting to watch out for in terms of commentary. Margins expect to see a slight bit of a marginal growth, and this is mainly due to the increased salience that we're seeing of the low margin gold jewelry, and other than that, jewelry EBIT margin that could be a bit subdued. That's what we're watching out for. New growth engines are key factors to watch out for. Carrot Lane, especially in terms of how is the growth there, as well as volumes that are likely to be a bit of an impact that we could see going forward in terms of a commentary that we're keeping an eye out on. Though in terms of Q4 update, they've said jewelry business will see a 19% growth, which accounts to around 80% of their business. Watches expected to see a 7% growth. And overall, the company said the overall revenue growth is also expected to be strong, and 86 stores is what is there that they were added during this quarter. So key factors to watch out for in terms of that is the demand trend outlook, gold price outlook, as well as sustainability in terms of volume growth, and new growth engines, how are they performing, are key factors to watch out for. So yes, in terms of the biscuit maker Britannia, we're expecting around 3% growth in terms of the revenues of the company. Profits are expected to be subdued, while in terms of the operational performance also, we're expecting a bit of a subduedness and a contraction of around 100 basis points in terms of the margins of the company. Now yes, what is impacting the gross margins of the company, the EBITDA margins of the company, is that gross margins mainly because of price cuts, higher grammage offset. That is something that is offsetting the impact of the softer commodity prices. So let's keep an eye out on the margins factor specifically, and commentary that will come in terms of the raw material prices as well as in terms of margin outlook. Also, let's not forget that margin decline this time, and EBITDA margin decline, is because last year there was a bit of a one-off that we had seen in terms of the PLI benefit they had received. So yes, because of that we're seeing an EBITDA margin decline. Volume growth is expected to come in at 5%, so watching out for that. Keep an eye out in terms of commentary on rural, the Hind belt, how is that doing, domestic market share, what are the trends there. Competition from the local players and regional players is a key factor to watch out for, and obviously commodity prices, like I mentioned before as well. Any commentary on that is something we're watching out for.
Well, not just that, but the big one, of course, is going to be tomorrow when Kotak Bank reports its numbers. I think more than the earnings, the street would like to know, what is going to happen with the senior leadership now. So let me take it across to Gaurav and find out what the street is anticipating.
Well, yes, talking about Kotak Mahindra Bank, now the stock is at 52 weeks low level, and if you look at the numbers now, if you look at the street's expectation, they are expecting healthy set of numbers coming up from Kotak Mahindra Bank for Q4. So net interest income is expected to increase almost by 9%. If you look at PPOP, now the street is expecting the increase of almost 6% in PPOP. Apart from that, if you look at profitability, now brokerages are somewhere expecting profitability to go down almost by 2.6% on a YY basis, but sequentially they're expecting provisions to go down, and that could be a reason why they're expecting profitability to go up almost by 13.5% on a sequential basis. Apart from that, if you look at net interest margins, now they're expecting net interest margin to go down almost by 5 bips on a quarter-on-quarter basis, and it may remain somewhere in the range of 3.15%. And apart from that, if you look at advances and deposits, now they're expecting a strong growth there as well. So the advances, they're expecting it to increase almost by 17%, while we may see deposits also growing at the same level, around 17% on a YY basis. But the main factor in this result is not going to be numbers. This is going to be commentary from the management. So we've already seen that Kotak Mahindra Bank has faced some of the bans from RBI. So for example, RBI has now banned the bank from onboarding new customers. At the same time, they have also banned banks from issuing new credit cards. And we also saw a key management exiting. So MD, Mr. KVS Manian, recently exited the Kotak Mahindra Bank board. And on back of this, we will definitely watch out for how the commentary comes up in terms of growth trajectory and how they are going to deal with the RBI's ban, and how we may see the trajectory coming up for credit cards. So all in all, good set of numbers are expected from Kotak Mahindra Bank, but apart from that, definitely watching out on how the commentary is coming up from the management.
is something that you need to watch out for Kotak Mahindra Bank apart from the earnings. Thanks, Gaurav, for that. But JSW Infrastructure, just wanted to bring that stock on board because the earnings are just out. They look quite healthy. I'm talking about JSW Infrastructure, and they've come out with a guidance as well, wherein they're talking about that they're looking at increasing their cargo handling capacity by almost 2.5x by FY30. They're actively pursuing and exploring various project development opportunities leading to a robust project pipeline. So that's the latest commentary coming in from JSW Infrastructure. But talking about logistics, Shibani, the stocks haven't done much. I mean, Adani Ports, of course, the business seems very strong, but the stock hasn't done much after that entire fiasco and the recovery post that. JSW Infrastructure, even other logistics names, the likes of Blue Dart, etc. What's your view in terms of investable ideas within that space?
So this is a space we are fairly positive on. We believe that if you look at the overall growth of the economy, the sector is very, very closely correlated to the growth, and our expectation is that economy would continue to grow from here on. In terms of the overall infrastructure, specifically with the kind of investments that have been made in terms of building roads, as well as even in terms of the DFC getting commissioned, overall sector should start seeing improvement in terms of growth. Yes, so far we have seen muted numbers that have come through, but expectations remain that from here on, as the economic growth continues, this is a sector where we believe that the numbers should start to come through, especially where volume growth is concerned. On the export side, we've seen that there has been some amount of impact because of global slowdown. However, incrementally, as things start to kind of settle down there, we should also start seeing improvement overall. So this is a segment and a sector where we believe that on a stock specific basis, there could be opportunities that can be examined.
Right. Okay, Shibani, always good to have you on the show. We'll let you go on that note. In fact, halfway mark, or rather half an hour to go before we wind up for the week. Let me quickly take it back to our charters and get in some closing trades as well. Rudramurthy, what's on your list?
See, positionally, I'm having two buy calls on PSU Bank. First of all, SBI looks very, very strong to me, and use this dip to buy State Bank of India. I'm looking at targets, positional target of around 880 to come on SBI, and eventually a 4-digit number of 1000 to come. Keep a tight stop loss of 790 on a closing basis and go long on SBI. For me, even Canara Bank looks very, very strong on chart, and it has given a clear breakout now above levels of around 810. So I will be a buyer in around 610. So I'll be a buyer in Canara Bank, looking at targets of 670 with a stop loss of 600. So a buy on SBI and on Canara Bank.
A buy on SBI, a buy on Canara Bank. Kunal, what's your list like?
So I'll go with a differentiated name, Oracle Financial Services. That's a stock which is forming a bullish hammer pattern last week. This week so far, the stock has done pretty well. It's come back to that 7,400, 500 plus range. So would suggest a buy on the stock.
Okay.
If you like this video, then like, share and subscribe to ET Now.